You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is March 9th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com, and guess what it is? My favorite thing to read because it's one-stop shop. It's the top 5 things to know in the market on Friday. And the first thing to know is attention to shift to wages in the jobs report. The U.S. Labor Department will release the non-farm payrolls report for February at 9:30 a.m. Eastern Time on Friday, and it'll be watched for more of what it says about wages than hiring. The consensus forecast is that the data will show jobs growth of 200,000 after adding 200,000 positions in January, while the unemployment rate is forecast to dip to a 17-year low of 4%. From 4.1. Most of the focus will likely be on average hourly earnings figures, which are expected to rise 0.2%, slightly less a month earlier. On an annualized basis, wages are forecast to increase 2.8%, slowing slightly from 2.9% in January, which was the largest annual gain in more than 8.5 years. A pickup in wages could be an early sign for higher inflation, supporting the case for higher interest rates in the year ahead. I figured I'd read that whole bit because I think that's pretty darn important. Second thing to know, though, is U.S. stocks hold steady ahead of NFP. After Wall Street breathed a sigh of relief on Thursday, as U.S. President Donald Trump announced import tariffs on steel and aluminum, but said Canada and Mexico would be exempt, and that other countries could apply for exemptions, investors were cautious. On the 9-year anniversary of the current bull market, stock futures registering slight gains as they turned their attention to the monthly employment report. Third thing to know is Bank of Japan offers no surprises. Bank of Japan stayed the course with its monetary stimulus at Governor Haruhiko Kuroda's final policy meeting before his new term begins next month. The Bank of Japan left interest rates unchanged and kept its yield curve control settings and asset purchases unchanged in line with market expectations. Kuroda vowed to achieve the monetary authority's 2% inflation as he appeared to embark on his second term. The fourth thing to know here today is Chinese inflation hits a 4-year high. China's inflation rose more than forecast in February, hitting its highest level since November 2013, although this strong reading was attributed to distortions from higher food prices due to the Chinese Lunar New Year celebrations. On an annualized basis, the Consumer Price Index rose 2.9%, nearly doubling the reading seen in the prior month, and topping the consensus forecast for a 2.5% gain. However, China's producer price inflation eased to its slowest pace in 15 months in February, as the cost of raw materials and other imports rose at a milder pace. The fifth thing to know is oil bears weekly losses ahead of U.S. shale data. Crude oil prices regained some ground on Friday as news of a U.S.-North Korea meeting lifted market sentiment, although concerns over U.S. oil inventories and production levels continued to weigh. U.S. crude oil futures rose 0.83% to $60.62 by 5:53 a.m. Eastern Time, while Brent oil gained 1.01% to $64.24. The U.S. benchmark was still on track for losses of around 1%. Our second story today is from CNBC.com. Bitcoin prices fall below $9,000, a 24% decline for the week. Holy moly. Bitcoin fell below $9,000 during Friday afternoon Asia trade, extending losses seen earlier in the week when it dropped below the key $10,000 level. The cryptocurrency fell as low as $8,370.80, down 24% for the week, according to CoinDesk's Bitcoin Price Index. Bitcoin recovered to near $8,995 as of 8:02 Eastern Time. Our third story today is from investing.com. Platinum's fuel cell car bonanza proves elusive. Platinum industry has been waiting for fuel cell cars to lift demand for years. Now, just as the technology finally looks to be gaining traction, car makers are finding ways to slash the amount of the expensive metal used. Cars using fuel cells, which generate electricity through a chemical reaction using hydrogen as a fuel and platinum as a catalyst, comprise just a small fraction of an electric vehicle market dominated by battery power. Both technologies have their advantage, but a big obstacle to a wider rollout of fuel cell vehicles has been a lack of hydrogen refueling infrastructure. Now, however, plans are underway to build networks in the United States, Germany, Japan, and most significantly, the world's biggest car market, China. Our final story today is from FXStreet.com. Gold bounces off weekly lows, still in the red, ahead of NFP. Gold managed to pare some of its early losses to fresh weekly lows, but held in negative territory through the mid-European session. A combination of diverging factors has failed to provide any meaningful impetus and has led to subdued range-bound price action. The prevalent cautious sentiment around European equity markets was seen lending some support to the precious metals safe haven appeal and helped bounce off lows. However, a follow-through U.S. dollar buying interest supported a goodish pickup in the U.S. Treasury bond yields, and that it might continue to keep a lid on any further meaningful up move for dollar-denominated currencies like gold. And that, ladies and gentlemen, is news you can use for today, March 9th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great weekend.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.